Good morning, and we are live here on Facebook. Hope you're having a good morning so far. My weekly real estate market update, very brief one this week. I think a lot of the stuff I've touched on last week is still relevant this week. We're seeing some exciting trends happening across the country and locally here as well. And what has been noticed is the amount of new listings coming to the market has increased, which is probably good news for buyers looking around the marketplace at the moment. More predominantly in the southern markets of Sydney and Melbourne, showing a very big uplift in property prices. If you're looking at charts, do check out my blog this week at martinutzi.com.au. I've got an interesting chart in there that shows the amount of new listings in Sydney and Melbourne is up 11% and 6.3% respectively. Up here in Queensland, still below the averages and certainly below the 5-year averages as well. Sydney and Melbourne are still below those averages as well. So whilst there's a influx in new listings coming to the market in those particular cities now, they're still very much below the averages. We have seen price growth continue to rise, so pretty much 0.2% in Brisbane, Sydney, Melbourne last week. Most of those capital cities have reported, or combined capital cities have reported a growth this year, and the combined capital city growth is 4.2%, so definitely a positive growth, but we have seen a slowing trend. Now, here's what I think's going to play out. We've seen the cash rate be placed on hold last week. So the RBA has put it on hold. Now, 3 of the 4 big banks are suggesting that that is the peak cash rate. From here, it's only going to ease back over the next 12 to 24 months. One bank, NAB in particular, suggests that the cash rate will increase one more time before the year closes. However, of those 4 banks, they're all predicting by the end of 2025 or maybe sooner, the cash rate to go as low as 2.6%. So that, if that happens, I certainly think that's going to continue to push those property prices up. Now, I guess the market's divided on what's going to happen next. Many are suggesting that an influx of new listings coming to the market due to the fixed rate cliff and maybe favourable seller conditions, an influx of new amount of properties coming to the market won't be able to keep up with the demand there, and that will see prices slow further and maybe even drop back. The optimists, like myself, I believe the market's going to continue to push up. Now, if we see that cash rate at its peak now and start to ease back, that supply-demand imbalance is still very much significantly noticed in all markets across Australia, particularly in the capital cities. Regional areas showing less growth in those capital cities at the moment as well. So it'll be interesting to see what plays out moving forward. We have seen some really good auction clearance rates in those areas that do auctions predominantly. So good auction clearance rates is a good sign that buyer confidence is improving. And I think now that that cash rate is on hold, buyer confidence will continue to improve as we move into spring. Now, spring is on the way, and you can feel the change in the temperatures now. And at that time of the year, a lot of sellers and homeowners do get excited and start preparing their property and bringing their properties to the market for sale. So I expect there'll be a few more properties coming to the market over the next couple of months, which again will be favourable news for people looking out there in the marketplace. There is still a shortage of properties, and certainly properties that present very well and present good value. They're the ones that are seeming to be snapped up quick by buyers. Buyers have more confidence in properties that show high level of maintenance and good presentation. So they're the ones that certainly are getting snapped up quick. If you look at the time on the market at the moment, it's 34 days on average across the country. Locally here on the Sunshine Coast, most markets are around that 34 days as well. Now that's been pushed out since the boom markets of 21 and 22, which was sitting, I think, around 21 days. But historically still very low, still very short time on the market. So again, a good sign that there's a lot of buyer demand there, and even with the increased listings at the moment, that buyer demand is still significant enough to suck up any extra properties that come up to the market for sale. So that's my wrap this week, guys. If you would like to stay tuned with all the market happenings locally here as well, we do a Monday report on a local suburb here on the hinterland. Check out my YouTube channel. There is a link in the blog today at martinutzi.com.au. If there's anything we can help you with real estate wise, give us a call. We'd love to chat, and hope you have a good weekend. Talk soon.